The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 2nd, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, how about we have an extraordinary one? Yep, we're going to have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Phone lines are open. If you can't call in, we've got you covered. You can send me an email, steve@tfnn.com. Please, in the subject heading, just put radio show question in our Tiger's Den. Any and every ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all indices in the red. The Dow is off 250 points, just slightly under 1%. A little bit over 1% is the S&P. That's 33 points to the downside. NASDAQ nearly 2%, off 143 points, 1 3/10% for the Russell. That's 21 points. Semis down 1 3/4%, 25 points, 1% New York Stock Exchange, 1 1/4. The Wilshire, the transport's off 1. NASDAQ Composite down 1 3/4%. Spot volatility index, she's trading out at 1934. Above all of its futures contracts, that's always a dangerous thing out there because it just simply is totally out of line. And so you're going to want to be watching that. It's trading at 1943. Gold is up $26.40, trading at 14.58. Silver is up 8 pennies, 16.26 of the print there. Light sweet crude is up $1.59. Leading the charge, the upside, Biorad Labs. That's up $24, nearly 8%. Blackline Inc. up 28% or $12. Fortinet, not Fortnite, but Fortinet up 10% plus. That's $8. To the downside, it's Mettler Toledo off $41, 5%. Amazon's down $42, but only 2% there. Booking Holdings off 2% or $38. So certainly things to look at, but of course, I want to look at what you want to look at. So, where do we begin? There's a number of requests that have come in. I want to go to those, and we'll do that probably right after this first break, or maybe during the first break. Let's just kind of take a tour and make sure that we have our head wrapped around what the markets are communicating to you and I as of 1:09 in the afternoon. The first place I always like to start, make sure we have our head properly wrapped, is making sure we understand the big picture out here. We get the big picture, and we can go ahead and start doing some fine tuning. So what is the big picture, Steve-O? It's really simple. There's been no breakout of prices inside the Dow, inside the S&P 500, inside the NASDAQ 100, inside the Russell 2000. There has been no breakout. Any reported breakout out there is just bad, bogus information out here. Now, the reason that we say that is we just simply, if you're watching us on Tiger TV, these are the monthly time frame charts. You can do this at home. You all have feeds of these 4 primary indices if you're doing any kind of charting. And all you have to do is just take the highs from January in 2018, inside the Dow, connect that to the high in October of 2018, and then you're just going to get a little bit of a rising trend line out there. All price did, even though we got over prior highs, was just run right into that, what can be a potential resistance area. But for me, that really becomes a sign of whether price is broken out or not. has not broken out. The same thing is done with the S&P 500, the same inside the NDX, and the Russell 2000. You don't have to worry about connecting the dots. Heck, it cannot get above, close above the trading month of February in 2019 out there. Now, what does all that mean? What does all this mean out here? It means we are in a consolidation. Now, in a consolidation, when you can't bust out the highs, it says, or as Tom likes to phrase it, if you can't bust them out, you try to bust them down. Are we going to bust them down? I don't know. It is a potential, that is for sure. And so the potential, and I'm not saying we're going there, but the bottom of the consolidation for me inside the Dow is in the 21,700 area. For the S&P, it's in the 2352 level. In the NDX, it's in the 6164 area out there. And as far as the Russell 2000, it's probably 1295. But we're going to take things one step at a time. But I do want you to understand, price has not been able to bust out the consolidation. We are in the unfavorable seasonal time period. It lasts typically through October. It can last longer than that, or it doesn't have to last at all. But we're in it. We're in it to win it. At this stage here, everything is, in essence, topped right at the time when it was supposed to, late July out there. Tweet or no tweet out here, there's been no breakout. Okay, so we've got that under control. Well, if there's been no breakout, what were the signals, okay, inside the S&P 500? And for that, we're going to use the ES Mini. And so inside the ES Mini, what we know is we had several topping patterns, not just one, but two. What are the two? If you just simply go back to the June 3rd lows, you start doing your wave count. That's Basil's tool. This is not the entire part of the Chapman wave. For that, you need to subscribe to Basil's services and go to his workshops, and you do want to learn that. But here, what I like to look at is wave number 7. When that happens, it says that's where you can see your largest declines. In addition to getting to wave number 7, prices moving higher, doing less relative energy. It was the second time in a period of weeks out there. The first time was confirmed. It was confirmed right here with this bearish engulfing evening star pattern. We had a bearish engulfing evening star that confirmed the second one out there. Now what we know is prices trading below the bottom of its profile. When you trade below the bottom of the profile, it's your first indication that there is a change in trend. So what we can say at this stage is there's a change in trend inside the ES Mini, irrespective, which I don't think is a word, of, and if it is, then we're good. So forgetting profiles, not that we want to forget them, but what price can do, what price should do, at a minimum, especially in the unfavorable seasonal time period, is pull back to where it most previously broke out. In this case here, inside the ES Mini, that price point is $27.44. That's what's going on inside the ES Mini. Inside the NQ out here, if we take a look at the NQ, here's what we know. It too formed wave number 7. It also created a 3 drive to a top pattern out there. The most interesting thing about the NQ is it's the one that's really sending us the larger message that there really has been a change in trend. What do we mean? You see, its most recent breakout was 77.43. We're trading at 76.63 right now. A close below 77.43 today, because we have the close below the market profiles, really suggests a change in trend is underway. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So several questions, two mics, one Aaron. There may even be a couple others that have asked if we could go ahead and review gold, the mining sector. And so what I will cover, I won't go into the detail of each of the questions, but in covering those, I should be able to answer all of those questions that our listeners have written in about. So let's begin first by taking a look at gold. And right now it's trading out at $14.58. It's the December contract, by the way, that we are taking a look at out here. And let's take a look at let's start with the larger time frame. Let's start with the weekly and then the daily and then an intraday time period to try to cover all these. And also, so part of the questions were about the mining sector and whether, being long, being short out here. And so the important thing here, just want to make sure everybody understands. So as we take a look at gold, it helps us with that sector. Where did I put that? I guess it's all the way in the back here. Give me a second to open this up, and it's not there. Okay. So what did I do with it? It's got to be close by. Got to be close. Here we go. Okay. So this chart here, the top portion is gold. The center portion is the GDX. And the bottom portion is our correlation tool. Now, I have our correlation tool set to a period of 5. So it's looking at the average over the last 5 days, and it's asking itself, is there a directional correlation between the two instruments? If there is, the bar is above 0. As you will see, the bottom panel of our screen, the majority of the bars over this average 5-day period are above 0. So it is highly correlated between these two from a directional standpoint. So if you can get the direction of one, you can get the direction of the other. Now, typically, we're going to say gold is the one that's going to be the dog, and the mining equities are going to be the tail, so to speak, out there. We're going to pin the tail on the dog, not the donkey out here. Well, I guess I could be the donkey with regard to these calls. But you and I, we are just paying attention to patterns. We're just going to be really methodical about patterns, recognizing these patterns. We just took a look at wave number 7, letter G, inside the ES Mini, inside the NQ. We took a look at the Rhodes momentum indicator signals inside the ES. We're agnostic to what the instrument is or what the time frame is, because the results are always, well, the patterns are always helpful in us identifying. See, you don't want to sell high and you don't want to buy low. You want to sell tops, you want to buy bottoms. Those are two different things out here. We know that these tools that we use help us to identify tops and bottoms. Will they identify every top and every bottom? Absolutely not. But unlike just simply being naked out there, and there's nothing wrong with being naked, but unlike being naked out there, at least we have some tools that when they are present, you pay attention to them. Okay, good. So we got that. Now, in taking a look at gold, let's just take a look at the weekly time frame chart out here for gold, and here is what we know. What we know is that I didn't do a good job drawing the A to B equals CD pattern. So we're going to draw that in here right now. And here's what we're going to know when we draw this A to B equals CD pattern in with regard to Goldilocks on a weekly basis, is that it completed the 1-to-1 A to B equals CD. The reason I say completed is because gold on a weekly basis generated a bearish shooting star candle the week of June 28th. Okay, so that's one topping signal. A second topping signal, as you and I know, we take a look at the TD setup 9 count. When you get to bars 8, 9, or the bar following 9, that too can be a top. Here's what we know as of 1:22 in the afternoon for the December contract for gold. 2 weeks ago was bar number 8. This is the bar following 9. At this stage, we don't have a higher high. Even if we did, it would still give us that TD setup 9 count topping signal. That's what we received 3 weeks ago, pattern number 2. Pattern number 3 on a weekly basis is yesterday's move higher, raised the bar, so to speak. What bar? Raised Stevie's Rhodes momentum indicator bar. You now see a black diagonal line, just like we took a look at inside the ES Mini. Now, this pattern has not been confirmed. The only way that this pattern gets confirmed is with a bearish reversal candle. That couldn't happen until next week. Could even happen later than that, but it could not happen until next week. But there are 2 confirmed, and now a third one, and the third, and this pattern, look, let me see if I can pull this chart back here for gold. All right, let's do this. So if we take a look at gold, use the same patterns out here, and trust me, traders in gold were just as euphoric, in July 8th specifically, in 2016, that gold was going to go through the moon. I don't want you to do that. I don't want you to take that approach. Because if we had been trading with the Rhodes momentum indicator tools, we also know that the week of July 8th was saying the hair on the back of our neck must be standing up. Why? Because price was moving higher, doing it with less relative energy, using the 5 different elements that I use for that pattern. So don't just take what I say and say, oh, done, I can figure it out. It doesn't work that way. And if you take a look at the very following week, what did we get? You got the bearish engulfing candle. And that had put in a significant top. It's a weekly chart. Weekly is going to have more bearing than a daily chart out here. And then price went ahead and moved lower. So you've got 3 patterns, 2 of them that have already confirmed out there. The third one is going to require that bearish reversal signal. So this suggests that there is a major top that is in place for Goldilocks. That's what the weekly chart says. What does the daily chart say for us in gold? Well, if we take a look at gold here on a daily basis, if we take a look at when gold most recently bottomed out here, and that bottom took place on the trading day of May the 2nd, and we start doing our wave count from the high that was formed out here on February 20th. And you do your wave count, you get down to that day on May 2nd, it was wave number 7. Very much like the ES Mini on a daily basis, very much like the NQ. That was a turning point and a significant bottom. Now what transpired a couple of weeks ago? July 19th, what did Goldilocks do? Really a couple different things. One of the things it did was it moved higher with less relative energy, and even on that trading session generated a bearish engulfing candle. Number 2, it got to wave number 7. So Mike's and Aaron's on a daily basis, if that high is not taken out, by the way, that specific high And a close, we're talking about a close over it, is 1466.50. As long as gold does not close over that, these patterns here are identifying a top. Now, the issue is they've identified a top. What does that mean when you identify a top, or where should price go? Price must go down and at least test support. Until price tests support, you have no change in trend out here. Well, where is support? We take a look at gold. We just rolled over to the December contract. I did not want to use the market profiles that were inside my Ninja Trader chart, which is why I switched over to this chart. And here's what we know. And that is that yesterday, when gold pushed lower early in the morning, what it was doing is was moving down to test support. That is $14.12 and $14.12.30. The actual low yesterday was 14.12.10. You kind of got to love how these profiles work. Now, what's more interesting about the profile that we're currently in is the structure is bullish. And if you can't bust them out, it says I'm going to go try to bust it to the upside. That's in essence what it did yesterday. Now, price is trading above the top of that profile as well. So if it's trading above the top, price can go further. But we know that there's resistance on that trading session from July 19th. As we take a look at the gold contract. Now, actually, the high that I have here, I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as our #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sorry about that. I don't ordinarily run through the breakout there, but I think we're finished covering at least the daily time frame chart for gold out here. Now, The real key, so for those of you, I'm not recommending that you go short gold. I'm not recommending that you take a short in the mining sector out here. What you didn't want to see, if you did, what you didn't want to see, because of that correlation between gold and the mining sector, what you want to see is you want to see price close below the bottom of the daily profile, which currently is 1412.30. I don't have a new profile or an indication of a new profile that is forming out there, but that is what you would want to see, a close below that. Now, if we go take a look at what transpired earlier today, this morning, on a short-term time frame, what we can just simply use is our TD setup levels out here. And the TD level setups, both resistance and support, in this case here, we're going to take a look at support, occurring as a result of 9 consecutive counts where the price closed higher than the close 4 bars earlier. For any time frame. In this case here, we're taking a look at a 30-minute time frame. Seems to work relatively well. When you bust through resistance are the green line, support is the red line. So, for example, back here, this was at 10:30 yesterday morning, August 1st. The key level of resistance that should have held was 1422.40. So depending on the time frame that you might trade or the message of the market that you're looking for, once price closed above that, and you were only in bar number 2 of a potential 9-count setup out there, it told you that resistance failed, price should continue to move higher. Just like support fails, price should continue to move lower. Well, the TD set up 9-count to the upside that began forming at about 1 o'clock in the morning. It generated a support level or a breakout level, really a breakout area, 1443.70. And what took place earlier at 9:30 this morning. So for those of you watching the open trying to figure out what to do or put on a trade or not put on a trade out here, what occurred was price came down to its breakout area, which is normal in a bull market, which is normal in a bull market. Gold is still in a bull market. It just has these different topping patterns that need to bust through support. And all price did on a 30-minute basis here for gold was come down, test out 1443.70 and move higher. Now, bar 8 was formed at 1:30, just as we were going into that commercial breakout here, and that's the highest bar. So on a 30-minute basis, it's possible that that high is a high. It could be a high that takes place between 1:30 and 2, or it could be the bar after the 2 o'clock bar at 2:30. If at 3 o'clock, between 2:30 and 3 o'clock, prices continue to move higher, this 9-count pattern will not have identified any kind of a top. If it does, on a short-term basis, identify a top, could be the high that took place between the 1 and 1:30 time frame, then what needs to happen to even consider being short gold or to even consider being short mining equities is you must see price or the breakout level fail. It is still 1443.70. Now, with regard to the new level out here, it's going to be the low of bar number 1. So let me give you that new level. But there's 2 levels. The 1443.70 doesn't go away. So you're going to have, in essence, support at 1443.70 and support at 1447.10. I'd still say the 1443.70 is the level that must fail. So that's the analysis of gold out here. If we take a look at gold, and I don't recommend going short gold or the mining equities, because what you know and what I know is gold right now has got this emotional flare that's responding to the president's tweets, or stuff that's going on internationally in Iran and so forth. And so, we can't control when the next tweet or when the next rocket might go off or when the next who knows what takes place out there. But what I do for those of you that are long, and the reason to take a look at this, and we have maintained this ever since those patterns began, is adjust your stops. That would be the best thing to do out there. Okay, is there anything else that we need to look at for gold out here? Because there are a number of folks that have written in, so I just wanted to be as thorough as I can on that. I'm just trying to think, is there anything else that we need to cover? There's nothing else that I can. Oh, the only other thing to cover out here, in order for gold to move higher or lower in earnest out here, it needs to be doing so in all major currencies. We probably should take a look at currencies. So let's just simply go take a look at the what's going on with regard to Goldilocks and its currencies out here. We'll do that by taking a look at gold price in dollars, left-hand panel. Gold priced in euros, that is panel number 2. Well, it says it right on my screen. You can see it made a higher high today. It did not make a higher high today inside of yen, but it did inside of pounds. So what you can see that's going on out here, right? When we take a look at instruments, especially for trading gold, which also then means the mining equities out here, it's really incumbent upon yourself to understand how gold is trading in the major reserve currencies. These are the major reserve currencies out there. We could add a couple others, but these are the major reserve currencies out here. And it's not just taking a look at how gold is trading in U.S. dollars. Yes, you want to know that, but you want to understand if you're sitting over in London or you're sitting over in Tokyo or you're sitting over in Paris right now, so you covered the 3 different currencies, what are those traders thinking? Are those traders sellers or are those traders buyers out here? There's no way they're sellers at this stage here if you're trading in pounds or euros. There's just no, I mean, not that you can't take that trade, but in general, there's not a darn thing bearish about their charts. They continue to make new highs out there. And it works that same way for other instruments. It works that way for bonds. When we take a look at what's going on with regard to Treasury bonds out here, this is all about, look, we're at new highs in everything except today because of the move inside the yen, which we can take a look at. I did not make a higher high out there, but this is how those folks that are concerned about their currency, trying to protect their assets out there, this is how you move from a local currency such as a euro, a pound, or yen into U.S. dollars, because it's just an easy way to do it out there. Okay, so that takes care of that stuff. Are there new TAS level forming? Not in gold, Bobby. If that was your question with regard to gold, the answer is no. So okay, next question that came in. This one coming in from Tim. Tim says buy, sell. Buy, seller, oscillator. Let's see, Steve. The other morning, you talked about an oscillator indicates sellers and buyers. I believe it was 39 and 19 period exponential moving averages. Do I have this correct? No. So let me give you that. Let me give you that level out here. Let's take a look at the NQ as an example. So inside the NQ, you're going to see a green and a red line on my screen out here, kind of a squiggly line, so to speak. Tim, that squiggly line is the oscillator unchanged line. What an oscillator is measuring the difference between 2 things. A price oscillator would be measuring the difference between the or whatever the 2 things are that you want. You can select whatever time periods. I use the 19 and 39 period exponential moving averages. In using those, I can create what's referred to as the oscillator unchanged line. It becomes support or resistance. It tells us whether it's just a retracement or some type of change in trend. I'm not going to go through this break, but right now the NQ, a close below 78.07, is another indication of a change in trend with price point back to 65.75. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So just to finish Tim's question out there, the way that the tool is used is very helpful. So, for example, here's the daily time frame chart for the NQ. And you can see in this time period here, June 21st, June 24th, June 25th out there, price began to move sideways and pull back. Now, on the trading day of June 25th, that pullback, fairly wide-ranging bar out there, many people might have looked at that and said, okay, time to jump in, time to go short the market. When all that was really occurring out there was a natural retracement. See, what you and I want to try to understand is what's a natural retracement and what is something that tells us that it's broken through an important level of support. All price was doing back then was testing Stevie's green line. Now, see right here on the trading day of June 18th, that line changes color from red to green. The cool thing about that is that had you known that, that tells us that the price oscillator is above. Look, I've got an entire workshop. If you become a subscriber of Mastering Probability, I believe it's on your members page. If not, I'll make sure that it gets on there. You can actually go ahead and see exactly all the mechanics, everything that is involved with this. But when that red line turns green or green turns red, in this case here, it was red to green, it tells you that there's going to be an impending test of the line and price. It doesn't tell us when, but it prepares you for that, which is a really cool thing because it prepared you then, in essence, inside the NQ on June 25th, if you were long, to not pull the trigger, so to speak, because all price was doing was coming back to test support. You can't use a moving average to do this. You can't use the 19 or the 39 to do this. This is looking at the difference between the two of those, and that is what is placed on this chart out here. So hopefully that helps you out, Tim, with regard to that. And let's go to our next question. Our next question coming in from John. And John in Sarasota wants to take a look at two symbols out there. We'll see if we can squeeze this in. One is AAL, American Airlines. And the question is, are AAL and FAS going south? Well, here's what we know right now, and just take a look at the profiles. We know that American Airlines is trading below support, that being the bottom of its bullish structured profile out there, which was 32.48. Here, 29.27. That says yes. Price is not below the bottom of the weekly profile. That becomes the next target. That's 28.60. So, yeah, heading south, but you're at 29.28. The bottom of the monthly profile is 28.38. So in this 28 range, 28.38 to 28.60, that should be the next levels of support out there. Let's go take a look at our daily time frame chart that has our other tools. What else do we know about American Airlines? Well, we know that it's trading in between the breakdown area, That was at 34.38. That's a solid green line. Now it says price may pull back to this breakout level, and that was 27.50. Now, those levels are different than the profiles that we gave you. But now you've got three numbers, three very specific numbers that you can have on your pad of paper, and you can watch as price continues south, as John says, and take a look for some type of turn, some type of pattern. Well, what would be the pattern? Today's going to be bar number 7 of the TD setup 9 count. Does that matter? Well, when it made its last bottom, it did it with the TD setup 9 count. It was the bar after bar 9. John? If Monday and if Tuesday, and those are the only 2 days, if those sessions close below the close of the bar 4 bars earlier, that's how you're going to get to bar 8 and bar number 9 out there. Remember, the low or bottom can occur on bars 8, 9, and the bar following bar 9. Ideally, you'd like to see that 9 count form, and then wait till day 12, in essence, 11 out there to make sure there's no lower low. And you'd like to see a bullish reversal signal, and you'd like to see all that happen before 27.50, which you may very well get because you've got support at 28.60 and 28.38. That's what I see, John, when I take a look at American Airlines. Now, with regard to FAZ, F-A-Z, I believe that is really for the XLF. And so we really should take a look at the XLF versus FAZ out here. And is the XLF going to continue to move lower? And in this case here, with regard to the top that was put in, I don't have any real significant. I don't have wave number 7. I don't have a TD setup. I don't have a Rhodes momentum indicator top. But at this stage here, price is certainly below its daily profile. Let's take a look at where XLF is trading in relationship to its weekly and its monthly profiles out here. So we know that price is below the daily. Says it wants lower price as well. We know that price is trading now below the center line of its box. So here's what I'd be watching inside the XLF for the close today. If this closes significantly below 27.53, see right now what XLF has done on its weekly time frame is it's pulled back to an area where buyers reside. This is a bearish structured box. Doesn't matter whether it's bullish or bearish structure. We know at the center line, both buyers and sellers believe there's fair value. We know that there's buyers at 25.69, and we also know that there's buyers at 27.80 or sellers at 27.83, the top of the weekly profile. If price can close, let's say towards the low of the day, 27.23, it'll be far enough underneath the center line to say that the sellers up at 27.83 and the 27.53 are licking their chops and they want to push price down to 25.69. When we take a look at the monthly profile, it's really not providing us with a ton other than to say, it's not providing us with a ton of information out there. So with regard to American Airlines, the pattern is more clear than when we take a look at the XLF. So I hope that helps you out with regard to those two issues out there. Thanks for writing in, and have a great weekend. Let's take a look at Clinton writes in. And Clinton, I think you wrote in yesterday, but I was having troubles beyond belief. And so you want to take a look at light sweet crude. So to look at light sweet crude, let's do this. Let's come take it. Now, I believe light sweet crude is rolling over from September to October. Somebody at the den could probably tell me, but I'm pretty sure it is. So I'm going to move off of, I'm assuming, Clinton, you're looking at this more from a long-term, longer, well, I don't know what you are, but I'm just simply going to move over here to the October contract for light sweet crude. Let's see what populates. Okay, so you're asking for future levels and a trend. Okay, so for future levels and a trend out here. So let me do, let's do this. I'm going to focus on this daily, weekly time frame. It's the daily chart we're looking at. And here is what we know. We know that prices pulled back to the center of its weekly profile. That's 53.68. What I want you to notice, Clint, is that price is the bottom of the profile is at 52.34 versus the top at 56.36. So we know that intermediate term buyers of light sweet crude believe that there is fair value. Both buyers and sellers believe there's fair value at 53.68. That was yesterday's low, and that has held. If that level fails, then what price ought to do is seek support where the weekly buyers reside, and that's at 52.34. It's a bullish structured profile out here. Can we draw on an A to B equals CD to the downside from a daily standpoint? We most certainly can, and it looks like this. The 1-to-1 A to B equals CD takes you to 52.82, right in between the weekly bullish structured market profiles out there. So that's what I see, and I hope that helps you out. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a couple of questions that are out here for the 2-minute wrap. Justin writes in and says, by the way, folks, thank you so much for just taking the time to write and ask me to, review something that is of interest to you. Same in the Tiger's Den. Always makes the show go smoother, and I stay focused. And so Justin wants to know, what is the downside target for the Dow, S&P, and NASDAQ? I don't really have a downside target. I have a downside target in time. We're in this unfavorable seasonal cycle, Justin, and I think what we should be looking for, well, first, the market is not just going to go straight down. We're going to see very buyable bottoms out there. We're going to see sellable tops, just as the average pattern that takes place inside the Dow. What I can say from an intermediate term standpoint is we have a pretty solid top that is in place out here. And that top should take us to some type of bottom that forms maybe around mid-October. I'm not going to get too caught up into whether it's the end of September, it's the end of October, it's the middle of October. We just know that it is not going to be August 2nd, or it's not going to be August 5th, or it is likely not to be, is really what I should say out there. So it's more time than anything else. We just simply have to watch the patterns as the market continues to move. If, for example, the New York Stock Exchange out here, when the New York Stock Exchange, right now it's sitting at its advanced decline oscillator at minus 133. Earlier in the day, it was down at minus 150. When it gets to plus 150, for the New York Stock Exchange, it's overbought. When it gets to minus 150, it's oversold. And from those levels, you can absolutely see tops and bottoms, buyable tops and bottoms out there. So what is this saying? If the market finishes horribly out here, folks, this advanced decline oscillator reading is very likely to get down to minus 150. That means pay attention come Monday, come Tuesday out here. We didn't talk about the fact that the spot VIX index is above every single futures contract. If you are short, that always has to make the hair on the back of your neck stand up. Pay attention. But longer term, Justin, the market should continue to mosey on lower through mid-October. Folks, thanks so much for being here. Have a fantastic weekend. I look forward to seeing you on Marvelous Monday.